All right, what up, traders? Jeremy here, coming at you for the market bias update report on Sunday, March 17th for the trading week ahead. This week, I wanted to start off sharing a little bit about the trading journal that I use to track my performance in the market and keep me on track with my goals. And I'm going to start just summarizing the last week of trading each week for you guys, just for full disclosure to show where I'm at, what I'm doing right, what I'm doing wrong. And hopefully you can glean some tips and tricks along the way in that. So if you look at the exit date column here, these are the trades that I closed out last week in the futures trade. Had a total of 15 trades. As you can see, I took 3 losses and had 12 wins. My biggest loss was $2,850 and I had 3 wins that were over 5,000. So I had the 53.50, 55.50 was the biggest, and 52.50 was the third biggest. So these 3 trades all did really, really well. I've also tried to color coordinate this for you so you can kind of see what's going on here. The ones that are highlighted in orange, I was short the market. So I was actually shorting Ethereum here, shorting Bitcoin several times here. You can see in orange, any of these that have the -1 instead of +1 next to them means that I was going short. So overall, 7 bullish trades, the ones here kind of in the dark green, 8 bearish trades, the one in orange. Overall for the week, I ended up making out of all of these trades, $23,541.50 for the trading week from Sunday to Friday. So awesome, awesome trading week. Uh, Biggest thing that I messed up on, honestly, was on this trade right here. I took an aggressive entry on that and was looking for a drop. The chart had kind of come up into resistance. The price had hit on upper resistance of moving averages, specifically on the 30-minute chart and the 1 hour chart. And I probably should have waited for price to clear those on the smaller time frame charts because this was meant to be a day trade. But I took an aggressive entry because I really liked the entry on the 15-minute and 5-minute charts, and I liked where the price was sitting and what the price was doing on the daily chart. So on the two extremes of the charts, on the longer time frame charts and the short time frame charts, I got good clean signals. But on the hour chart and 30-minute chart, like I said, the kind of in between intermediate, there were kind of some mixed signals and decided to take that trade anyways, took a shot at it, ended up getting wiped out by a big green candle where buyers kind of stepped back in to try to defend that zone. And even though price did ultimately move lower, you can see my purchase price here, 72,315 for the next time I tried to short. And I had closed above that because I got bumped out. I played from 72,160 and got bumped out at 72,730. So ended up getting knocked out on that. And then my bias did confirm lower, and I was able to play it again and more than wipe out that loss. Ended up making a little over $7,000 in gains on that. So overall, super happy with it, but had some mixed signals on that one on the intraday. And that was the biggest learning point was if you are day trading, definitely check different time framed charts and make sure that they align for whatever time frame you're planning on being in it. My day trades usually range anywhere from a few minutes to 4 to 5 hours. And so it's important for me if I'm taking an intraday trigger on the 5 or 15-minute chart to make sure that it is still supported on the 30-minute or 1 hour time frames. And I just didn't do that on that one. So anyways, also super, super big news just to show you guys, my trading goal for the year was to hit $100,000 in gains. And this last week on 3/14, I hit that. I hit a high on the account, just over $106,000. And you can see right here, total gain and loss for the year. I'm actually sitting at 107,591 right now. And that's because I've already locked in for this trading week starting today in the futures. I already locked in about $1,500 in gains here since the opening bell about an hour and a half ago. So anyways, awesome, awesome start to the week. awesome trading week last week. Just want to show you guys what is possible and a little snippet on the trading journal and why it is so incredibly important to track your trades, because that way you can go back and look at it and see what you did wrong and take some notes on your positions and really hone your system over time to know what you did right, know what you did wrong, and obviously helps you stay on track to do more of what you were doing correct and less of the mistakes. So anyways, just wanted to show that to everybody real quick before we dove in. So looking at the S&P 500, taking it away for the trading week ahead, I don't have a super strong opinion one way or the other. Obviously, we are still in a huge uptrend, setting higher highs and higher lows. We are still above the 20-period moving average, and we are currently fighting to stay above the 9 EMA, which has played a very pivotal role in recent price history. Personally, I would not mind seeing this come down and test this rising 20-period moving average. Give us a couple of days of consolidation there before trying to make another push higher. I don't think the bullish run is over, but as I've said in the last several weeks, I am just getting less and less interested in playing anything on this move. I do feel like eventually we need to come back down and test this 20-period moving average, and we have at least some momentum to the downside right now on the shorter time frame charts that makes me think that we might get that this week. And if we do, we will have to see how price performs at that 51 30 area and then make the decision on whether or not we want to go bullish or if we think a deeper pullback might be in order on a longer time frame chart. So not super interested, but we're currently fighting for that 9 EMA, and it'll be important to see how we close today's trading on the futures chart on Sunday here to kind of give us a clue as to what to expect throughout the rest of the week. Going out to the NASDAQ, rinse and repeat the exact same story. On the NASDAQ, we are actually below the 9-period moving average. So we have broken that down a little bit, opened fighting for the 20 instead. And it'll be really, really interesting to see if we can fight back up and reclaim that 9, or if we fail the 20 and roll over. The tech sector has been leading the market for months and months. So the way that this chart goes likely will lead the rest of the market. So anyways, no interest in playing this currently, but just interesting to note that we are souring a little bit more on the NASDAQ currently going into this week than we have been on the S&P 500. Going out to the Russell, still trying to break that 2100 level. Had an attempt, got above it, but never closed above it. Had a wick high, had an open above it, came back down, several more wick tests, and then broke down. And now we're just kind of chopping around in this range. Not super interested in this until we get a close above 2100 on the daily candle. If we get a close on the daily candle above 2100, I think it'll be a quick trip up to 2200, and that is kind of what I am looking for. But these are the price points that I'm most interested in checking out: the 2100, 2137, and 2200. And actually that 2137 hasn't been adjusted since the contract rolled over, so it's actually 2122, let's call it, just above the wick high here. Going out to the Dow Jones, as you guys know from previous videos, I don't particularly track the Dow Jones super intensely, but right now we have a range here that we have been setting and just kind of going back and forth in this ascending channel. We're right in the middle of the range. Not a trade here to speak of one way or the other until we either come down and test the low side of the range or come up and test the high side of the range. So nothing really to see there. If we go out to Bitcoin, Bitcoin is interesting right now. On the daily chart, we have bearish momentum. We have broken the first of our most aggressive diagonal support lines, and our RSI and our MACD are rolling over, signaling potential bearish action. Now, that said, if we drop into an hourly time frame and zoom in a little bit here, you can see that we have gotten back above the 20-period moving average, and we are sitting right at it and trying to hold right now. So it is going to be really, really imperative that we hold that 20-period moving average on this chart. And if we actually bump over to our chart that has my Bollinger Bands, you can see that we are currently fighting to hold that 20, and we are right in the middle of our two Bollinger Bands. We have been decreasing, but the momentum is starting to pinch. So these Bollinger Bands, the upper one is one standard deviation, or excuse me, two deviations above current price. The lower one is two deviations below current price, which means 95% of price action should stay within these two bands. So right now we're just fighting for direction. If we drop even smaller time frames here, we had a nice bottoming action. We got back above that, but we are fighting back and forth to hold it. So I don't have a super clear direction on it yet. We are waiting to see how this resolves on the intraday chart. But if we get a break back above, let's say 69,700, 69,700, I will be interested in playing the upside on this. Going out to Bitcoin's cousin, Ethereum, fairly similar read. If we drop out, it has broken down a little bit more than Bitcoin has. It's a little bit closer to the rising 20-period moving average on the daily chart. And if we pop this over to our other daily chart with some of our indicators here, you can see a little bit more. RSI is rolling over, MACD is rolling over, but very similar story. We're fighting on the intraday chart, and if we get back above the daily 9 EMA here, which is currently at 3,764, let's just call it 3,765. I will be interested in playing the upside back to all-time high and potentially up higher than that, and that could end up giving us a really good risk to reward trade. So super interested in Ethereum. Going out to crude light, had a breakout last week on Thursday, consolidated on Friday. Now we're just opened right at that consolidation zone, just above $80. Currently, I am expecting further price movement here. Wouldn't be shocked to get up to 84 in the next week or two, and 86 as an upper target for a nice sized move. But need to see a break here. And if we drop to an intraday chart again and just zoom in, you can see right now we are fighting for very important moving averages and actually trying to break down on it right now. So we will see if this lower support holds at 80.49. If it doesn't, we might get a dip and have aggressive entry down at lower levels. But I do see this eventually rising and giving us a trade to the upside. Going out to gold. Gold was on a tear the last 2 weeks, consolidating down. This should surprise no one after big moves, especially in gold. It needs to take some time off. This is healthy. And you can see the diagonal line I have drawn there. So any trigger above that diagonal resistance line should be considered a trade to the upside. Probably something in the neighborhood of 2180. If we can get back above 2180 and claim that with a close on the daily chart, I think it'll be off to the races. And if we toss this out onto a longer time frame chart, you can see we really did just break out above a massive multi-year consolidation. And I see no reason that this will not continue with some momentum to the upside in the next couple of months. So super interested in buying the dip on gold. And then finally, let's go out to a couple of our metals real quick. Palladium futures here. We've had a couple of wick tests up, and I actually had a position on this and ended up closing it for just a tiny, tiny gain. I think I got about $200 out of it after jumping into it Thursday or Friday there on one of these wicks on an aggressive entry that just didn't close above, came back down. And whenever I see those kinds of wicks, it just means that you need more time to develop, and that maybe we might get a retracement back down into the rising 9. Somewhere around 1050 and give a little bit better entry. So still interested in further bullish move on this, but needs to take a little bit of time. On palladium, or excuse me, platinum, a break above 950 would be considered bullish. Moving back up to probably 1020 to 1030, somewhere in there. So interested in tracking that one this week. And then finally, silver has been in its nice monster move here, overextended on the short term. Not super interested in chasing, but if it does give us a pullback, I would be interested in that. And then finally, let's go out to natural gas. Natural gas continuing to try to give us a bottoming pattern here. If we can reclaim the moving averages currently at about 177. If we can get a close on the daily chart above 177, I see no reason for this not to come back up to 2 or even back up to 212. And I know that doesn't look like much, but in the futures market, that is a substantial gain. Finally, let's go out to UUP, check out what it's doing. It had been in a downtrend, actually has confirmed back above its moving averages, so we might get a push back up to retest this level around 28.26 on the dollar. If it does start to move higher again, that is going to put some pressure on gold, and it's also going to put some pressure on equities in general, so keep an eye on what the US dollar does. And finally, guys, let's go out to the heat map, 1 week performance from last week. Honestly, a lot of the selling has been in the software, semiconductors that were overextended, obviously still bullish in semiconductors, but they had just gone on such a monstrous tear. It is of no surprise that we're seeing some selling in those areas. And seeing these kind of come back to their support levels a little bit. There might end up being some good bullish trades in the week ahead on this area of the market once it settles out. And oil and gas has been the clear winner from last week, followed by financials. So financials and energy are the two sectors to keep on your radar the most this week, and then followed by semiconductors, hoping to find a bottoming pattern in there that we can play for the next bullish run. Finally, I know I've said finally like 6 times today, but just checking out the Forex Factory for the important information, economic data coming at us for the week ahead. Federal funds rate is going to be announced on Wednesday. That is going to have major market ramifications. FOMC statement as well, and press conference from Jay Powell. So keep an eye on Wednesday because that is going to be a market mover. Thursday, unemployment claims and flash manufacturing PMI and services PMI. And then on Friday, Federal Chair Powell speaks as well. So everything loaded on the back half of the week. Nothing really to see on Monday and Tuesday. So we should trade fairly technically on those 2 days. As always, guys, let me know if you have any questions. Hit me in the comments if this was helpful. Smash that subscribe button, smash that like button if you want to help me out, get the algorithms kicking. I hope this was helpful to you. And as always, again, let me know if you have any questions. I am here to help. Talk to you guys next week. Bye.